Welcome to Markets Now. I'm Michelle Rook along with Jeff Hoogendoorn with Professional Ag Marketing. Grains leaning mostly lower here at midday with a few exceptions in the wheat complex. Over in the livestock futures, we've got live cattle mixed feeders are higher, but hogs have been two-sided. Currently, just a little bit of weakness there. Jeff, I want to talk about the grain markets. First of all, we saw a lot of two-sided action initially this morning. It looked like the market was kind of looking for direction, but now that we're seeing corn and wheat kind of break, or corn and soybeans kind of break here, are we just continuing to see consolidation because we just couldn't take out resistance areas on the charts, or is there more to it?
Well, I think, the path of least resistance over on, especially on the corn market, I think was somewhat lower here today because, like you said, we kind of pushed up towards the top end, couldn't do anything with that. But
Right.
we're really starting to warm this market up a little bit here, Michelle, as we're talking. Now we're down 9 cents on, on the May corn, for an example. So according to my lines, we are right on top of the bottom side of this channel that we've been in here for almost forever. So this thing maybe is going to get interesting yet today. I haven't been spending much time on the corn because it's been such a narrow range and
Right.
disconsolidation, but it might be worth watching the close here today and getting in tomorrow. This corn thing might get kind of interesting.
Yeah, and I have to believe that, like you said, corn couldn't take out resistance, soybeans couldn't take out resistance areas at last week's highs. And so the funds just kind of give up and maybe start liquidating then, right? You don't
Yeah,
necessarily have to have a fundamental reason.
that's fair. That's fair. And if I'm not sure that anybody follows the Outlook conference stuff much, but they've got some, I think what everybody expected, but some higher acreage numbers in there and some really high yields. Maybe that's having an impact today. I'm not sure.
Yeah, certainly, like we said, I think the market has been anticipating some higher acres, especially for corn with the corn soybean ratio where it's at, don't
For
you think?
sure. For sure. Yep. No, it's nothing surprising, but you start plugging it all into a spreadsheet. Now, that's something we like to, sometimes or quite often spend some time on the big picture. And we're very much in the camp of having some more corn acres. I think most people are. The USDA is saying 91. I kind of think the market's maybe even thinking more 92, Michelle. And that's been going up. We would have started at 90 here, was it 6-8 weeks ago, or maybe a little bit longer than that. So the corn acres are increasing. I am by no means in the 181 and a half yield camp. I understand that's the trend line, but man, I think the 177 and 78s, which would be at and slightly above records, they come a lot quicker.
Yeah, I tend to agree with you on that being a pretty high, lofty level to try to hit here with the market. Okay, so like we said, kind of a lack of direction here in the grains overall, or at least not enough bullish news to get the market moving higher. Let's move over to the cattle market. Like I said, live cattle futures, we scored some new contract highs initially here. Some of that fundamentals look very good, but you also had this atypical BSE case in Brazil, and now they've pulled back their exports to China. Is that right?
Yeah, that's what we're hearing. The exports to China are certainly off the table right at the moment. We're hearing that it was the Brazilians, which that's what they did last time too. It was in 2021. Brazil voluntarily stopped the exports to China. I think it was the time before that they kind of tried to sweep it under the rug, and China didn't like that very well at all. So it's probably an okay move on their part. I'm a little bit of a mixed bag, as far as how this impacts the U.S. We're importing so much beef right now, lower quality beef, and a lot of that coming from Brazil. So on one hand, I'm wondering, okay, are we going to see some more of that come to the U.S.? I know it sounds crazy. China doesn't want it, so apparently we do, right? But that is the reality of one of the scenarios. The other, of course, is the more obvious one is China's still coming after beef, and that's another thing that's different than 2 years ago is
Yeah.
importing more beef. So you like to go back and look at the lay of the land and say, okay, this is what happened last time, but things look different today. So I'm not sure what to make of this, if it's going to be bullish or bearish on the U.S. Beef movement, Michelle.
Yeah, it doesn't really matter, Jeff, because with the tight numbers that we have, obvious exports are like, icing on the cake here, but
That's fair.
definitely we're in a tight enough situation from a supply standpoint. Do you think we're going to continue to be well supported here? I mean, today, if you just look at higher cash, boxes pretty much on fire, those things continue to be a good reason to be higher, don't you think?
Yeah, that's an excellent point. Boxes, I should have looked it up before we came on here. Maybe Michelle, but I think they've been going up for a good 10 days in a row now. And that's obviously not because of the BSE case, right? But yeah, we're just getting into some lower supplies. We killed just under 630 all cattle last week. It's been since COVID since we've done that. So we have not done that intentionally because of supply for going on 4 years. So that's a big deal in my mind. Obviously, futures trading contract highs, the futures know it's a big deal, right? So you have to kind of continually weigh against each other as to what's priced in and what isn't. But it's about to get real interesting in this cattle market from a supply standpoint, in my mind.
Yeah. And the choice boxes are knocking on the door of $300. So we'll see. This is one of the highest prices I think we've seen for February. What about the hog market, though, Jeff? Cutout values have started to respond. We're well above that $80 mark you and I talked about as the line in the sand. Cash trade has improved here. Are we going to be able to continue to keep this market going, though? Because the futures right now, the front end of the board doesn't seem to be responding. Is that because of the premium that it has to the index, or what's the problem?
Well, I could go all day without having to talk about hogs, Michelle, but you had to bring it up, didn't you? It's a tough market in my mind. It's just really tough. We can't get anything to get going for us. It kind of feels like what I would say the old days of like 2016 to 2018, when we were kind of in a expanding supply scenario. At that time, it was not uncommon to really have the spring doldrums, and that's the way it's feeling more and more today. Which you can say, okay, well, that's not so bad. We can really get some things rolling, as you get closer to March and April. But like I said, the futures are holding a big premium today against the April and especially against the June and the rest of the summer months.
Right.
So we need some good news in here, and we're just not getting any. I think most alarming this week is weights are starting to head back higher again, and that's very concerning from my chair.
And the numbers are getting bigger, and certainly that doesn't match up with the USDA numbers or the Hogs and Pigs report, does it?
That's right. It's been happening since the first of the year. We continue to kill more hogs than what the USDA told us that we were going to, and honestly, we were sipping the same Kool-Aid, and maybe not quite ready to admit defeat there yet. But it gets a little harder each week to say, hey, we might just flat have a few more hogs, at least in the short run here, than what we were anticipating.
Yeah, I think a good point you make. Thanks so much, Jeff Hoogendoorn with Professional Ag Marketing, and that's Markets Now.